The pause in student loan payments is set to expire in October, and today we're going to talk about what you can do when that moment comes. Don't panic, you have options. But first, some background. The Supreme Court recently ruled that the Biden administration could not proceed with its plan to forgive student loans. So after a 3-year freeze, the federal government is turning payments back on. So if you have student loans, you'll have to start paying again. If this feels a little bit like deja vu, you're not alone. This is the 9th time that the federal government has announced that payments are about to resume. So it's not clear if this deadline is set in stone, but in any case, a deadline has been set and interest is set to start accruing in September. First payment will be due in October, so you need to prepare. MarketWatch editor Jillian Berman spoke to experts ahead of the resumption of payment to figure out what borrowers can do to prepare. Here are 3 tips to consider. Income-driven or income-based repayment plans allow you to bring your monthly payment down to a level you can afford based on your income and family size. The good news is you don't have to call anybody to apply. Just go to studentaid.gov and file your application online. You don't even have to wait for payments to resume or even to get your first bill. You can take action right now if you think this is something you need. Your second option is forbearance or deferment, which means a temporary pause on payments. A word of caution though, forbearance should be your very last resort after you've looked at all other options, especially those income-driven repayment plans we talked about. So if you call your servicer and the first thing they offer is forbearance, pause and ask for other options. During the forbearance period, payments are stopped, but interest is still accruing, which means that the amount you owe will keep ballooning. And if one day you qualify for a forgiveness program, like the Public Service Loan Forgiveness Program, anytime you spend on forbearance will not count. So forbearance means you don't have to pay, but you're still paying for it in other ways. It's not a sustainable long-term solution. It could be a short-term solution if, for example, you lost your job and you have a short-term cash problem. Then yes, forbearance could make sense for the short term. And the last thing to consider is you need to be very, very careful with potential scams. What Jillian found in her research is that every time the federal government announces that payments are about to restart, what happens is scams also go up. And another complicating factor is that during the last 3 years, during the payment freeze, many of the student loan servicing companies are actually no longer servicing student loans. And so millions of people will get a new bill from a company they've never heard before. Here's what you need to do to protect yourself. Be very careful with texts or emails that talk about payments. You should receive a billing statement 21 days before payments resume, and that should be in email form or regular mail. But other than that, you should not be hearing from debt collectors or anyone telling you you're overdue. October is right around the corner, and so is the first payment after a 3-year freeze. So don't procrastinate. The earlier you start preparing, the more options you will have. And if you want more videos like this from MarketWatch and the Explainomics playlist, make sure to subscribe, and I'll see you next time.